Hi, I'm Kylie Mathieu and welcome to Wealthy Millionaire. Today we're going to talk about payday loans. But first, I'm not an accountant or a lawyer, so always make sure to consult a professional before taking any financial advice. A payday loan is a short-term, high-interest loan that a lender extends based on the borrower's income. So a payday loan helps you with your financial emergencies before you can get to your next paycheck. With a payday loan, there's no upfront fees or guarantor is required. As a result, these loans charge high annual percentage interest rates, mainly within the range of triple digits, sometimes going as high as 400%. When applying for a payday loan, most lenders will request proof of income and an active bank account. And once you get the loan, expect it to be deducted from your next paycheck. And a payday loan works for you if you have a bad or no credit record at all. However, before applying for a payday loan, there's a lot that you need to know. So what we're going to do is go into a detailed look at payday loans, including how they work, how much they cost, and payday loan alternatives to consider. So let's dive in. So how does a payday loan work? Payday loans have a simple application process and few qualification requirements compared to other types of loans. Once you identify a suitable payday loan lender, you can then apply for a loan either online or by visiting a brick-and-mortar office, as long as you're over 18 years old. You also need to have a proof of income and an active bank account or credit union. Some lenders may also request a social security number. The moment the lender receives your request, they'll then check your qualifications, then issue you the loan. The cash can get delivered to you in about 15 minutes or less. Typically, with a payday loan, you get your funds within 24 hours, and you'll be expected to settle this loan on your next payday, mainly within a range of 2 weeks to 1 month. In exchange for the loan, the lender will request a signed check or permission to electronically withdraw the money from your bank account to settle the loan on your next payday. Alternatively, you can apply for the loan through a brick-and-mortar office, and the lender may give you an appointment to return when the loan is due. If you fail to pay the loan on the first payday, it incurs a fee, and the cycle continues until you settle your dues. You can also decide to roll over your loan to a future date for another fee. So if you default on your loan, the lender may report you to a credit bureau and sell your loan to debt collection agencies. Defaulting on your payday loan negatively affects your credit score and your credit history. Generally, different states have different laws governing payday loans. So this is including the maximum amount you can borrow, the maximum loan term, and loan charges. A direct payday loan is a loan that you apply for directly through a primary payday lender, which makes its own decisions about your loan. There's no intermediary or broker involved here. When you apply through a broker, they'll provide various direct lenders with your information before selling your loan to the highest bidder. Brokers are middlemen who will connect you with the lender, and they don't offer the loan themselves. Practically, payday loans with a direct lender, bad credit, no guarantor, are less risky than when a broker is involved, as brokers share your financial information with many people, increasing the risk of fraud. Direct payday loans are also cheaper than those involving brokers. So how much does a payday loan cost? Well, according to the Consumer Financial Protection Bureau, payday loans for bad credit with no guarantor and a direct lender cost about 15% for every borrowed amount. So this translates into $15 for every $100 borrowed. So for a 2-week payday loan, the APR can be as high as 391%. If you fail to repay the loan on the agreed day, the lender will charge you a late payment fee. And if you continue to default, the fee will grow. And in the long run, you may have to pay more in terms of interest than a principal amount that you borrowed. So some borrowers have ended up paying $620 after borrowing only $375. Payday loans can be risky and can leave you trapped in a vicious cycle of debt that can be hard to get out of. So how much can you borrow with a payday loan? The amount that you can borrow on payday loans varies depending on your state's regulations and your financial standing. However, most lenders allow for between $300 to $1,000 payday loans. Always have it in mind that the higher the amount, the larger the dent it will leave on your paycheck. So does paying back a payday loan build credit? Well, a good number of payday loan lenders never report to the credit bureau, meaning no matter how faithful you are at repaying your loans, they won't help you build your credit. However, if you do fail to repay the loans, then the lender might report it to the credit bureau. They can also sell your debt to collection agencies, so you can hurt your credit score. So what do you need to get a payday loan? Well, payday loans are easy to get, and all you need is proof of income, an ID proving you're over 18 years old, and an active bank account. Some lenders may also require a social security number as well. So what happens if you can't repay a payday loan? Just like all other loans, failure to repay a payday loan will attract some penalties. Depending on the lender and your state's regulations, you can be charged a non-sufficient fund fee or a late payment fee. You may also decide to extend the due date through a rollover, but this will still attract some fees. So failure to pay the loan can also lead to bank fees, and the lender can also forward your case to collection agencies or report you to the credit bureau, which will lower your credit score. So let's take a look at some payday loan alternatives that you can consider. As you can see, payday loans aren't really the best option to finance your emergencies. They can be expensive in the long run. So it is advisable to consider loan options such as interest-free cash advance apps. You consider loans from interest-free cash advance apps like Dave, Chime, and Earnin. However, these apps have specific qualification requirements and caps on the amount that you can borrow. You can get some fast cash from an online lender or a credit union in the form of a personal loan. So personal loans don't cost as much as payday loans. In fact, credit unions offer low interest rates for bad credit personal loans, but you have to be a member before applying for a loan from them. Another cheaper way to cater to your financial emergencies before your next paycheck is asking for help from family or friends. Just make sure you have a clear written agreement on your borrowing terms and how you're going to pay the funds back. Another option is to approach your bank and ask if they offer small dollar loans. Some established banks offer small dollar loans for emergency expenses. Even if you are hard pressed for cash, there are some payday loan alternatives that you should really try and avoid. So these include things like high interest long-term installment loans. And some installment loans are enticing because their repayment periods can extend up to 5 years. And they don't require good credit scores as well. However, such loans charge relatively high interest rates that can end up costing you a lot in the long run. You should also try and avoid auto title loans. Although these are short-term loans, you'll be required to hand over your vehicle title as a collateral. So if you fail to repay an auto title loan, you may lose your car. So here are some frequently asked questions. What is a payday loan? Well, a payday loan is a short-term, high-cost loan for small amounts repaid on your next payday. Another one that frequently comes up. Can you claim PPI on payday loans? Yes, if you feel you were mis-sold a payday loan by a lender or that you've suffered debt due to unfair practices or sky-high interest rates, you can claim payment protection insurance on a payday loan. Another frequently asked question, how do you get a payday loan? Well, you need proof of income and to have an active bank account. Some lenders will require your ID to prove that you're an adult and your social security number. You can apply online or through a storefront. Why are payday loans bad? Well, payday loans attract relatively high interest rates, and if you default, the lender can report you to the credit bureaus, which will lower your credit score. You can also end up paying more than you borrowed from the accumulated interest and other charges if you continue defaulting. So here's the bottom line. When you're faced with a financial emergency, a guaranteed payday loan for bad credit with no brokers may seem like a good idea. However, these loans may be relatively expensive in the long run and may not be the best way to address your financial emergency. So you can turn to the payday loan alternatives discussed to cater to your financial needs. And once you settle your emergency, work on building an emergency fund to handle unexpected financial needs in the future. I hope you enjoyed this session. I'm Kylie Mathieu. Thank you for watching Wealthy Millionaire.